Hi students, this is Michael. In this video, I am going to explain you how to write journal entries easily without any difficulty. Already you might have learned about the journal entries in your classrooms. The same journal entries I am going to teach you in a simple way without taking much difficulty. Now, journal entry means business transaction is recorded in a systematic manner in a book. See, this part is a journal entry. This is a business transaction. Machinery purchased for cash rupees 10,000. Business transaction. For this, we have recorded like this. Machinery account debit to cash account. In this, what are the parts? Date part, debit part, credit, narration, DR 10,000, 10,000, debit 10,000, credit 10,000. How these are recorded here? Now I am going to discuss. For identifying what is a debit item and what is a credit item in a business transaction, you have to put these questions to yourself. Here there are three types of rules. Real account rule, first rule. Personal account rule, second rule. Nominal account rule, third rule. But in the books, generally they say this is the first rule. Personal account rule, then real account rule, then nominal account rule. But in our olden days, lecturers used to tell this way. We understood it very clearly. We were very comfortable. And we can follow the same method. See, whatever method you follow, it doesn't matter. Whatever flow, order you follow, it doesn't matter. Finally, you have to write the correct journal entry. Right. If you follow this method, it is very easy for you to make a proper journal entry like this. Journal entry means a transaction recorded in a systematic manner, and the book in which all the journal entries are recorded is called journal. It is called journal. In this journal, here the first column is date, the second column is particulars, the third column is LF, means ledger folio, then debit column, then credit column. Here you have to write rupees, rupees. After that, you have to come here, read the transaction. First you take the date, 2026, January 1st. You write here, 2026, January 1st. Read the transaction and put these questions. First this question, then this question. Machinery purchased for cash. Machinery purchased for cash, you try to analyze it. What happened here? When you purchase the machinery is coming, cash is going out. What is coming? Machinery is coming. So, machinery is a debit as per this rule. What comes in is debit item. So, in this transaction, machinery is coming. So, it is a debit item. Since it is a debit item, you have to write a debit item first. The debit item always written first. That is the rule. Machinery, account, A by C means account. Here you have to write DR. DR means debit or debtor or debited. Generally people say debtor or sometimes debit, sometimes debited. Machinery account, debit. Here you have to write 10,000. What is this 10,000? This is the cost of the machinery which we purchased. Here you have to write 10,000. What does this line indicate? Since it is a debit item recorded in the first line, we received it. Here the rule is what? Debit what comes in. So you can correlate this first line with this rule. So you can understand easily that this is coming and this is going. Coming first, going next. Then in this machinery purchased for cash. So machinery came and cash is going out. Since cash is going out, cash is a credit item. So you must write to cash account. To the word to you have to write. Here you have to leave some gap. You don't start here. You have to start here. To cash account. After that, write the amount here. Over. Then you need to give some explanation for this debit and credit. That explanation is called narration. This narration starts with the word being. Being means because of. Being machinery purchased. Because of machinery purchased, we debited machinery and we credited cash. Over. Then you draw a line. Ends the matter. Then take the second transaction. January 5th. Machinery sold for cash. Then again you put these questions. First you should raise this question. What comes in? What comes in? Read this. Machinery sold for cash. Machinery is going out, cash is coming. So what comes in means cash is coming in. That is debited here. DR 9,000. Then what is going out? Machinery is going out. Right here, machinery account 9,000. Give a brief description of the transaction. That is called narration. Then draw the line over. Then coming to this. Whenever you record a business transaction into that, you just give a tick mark. This is over. This is over. Now we are going to deal with this. Machinery purchased. On purchased means coming. With this word only you can understand. Purchased means it is coming. Machinery purchased. So it is debited. Half of the journal entry is over. On credit. On credit means we are not giving anything. Then who is giving this machinery? You have to question. Here what goes out means nothing because it is on credit. Nothing is going out. Then go to this second column. So beside this, what is there? Giver. Who is the giver? Credit the giver. Ravi. Ravi is the giver. That's why Ravi account is credited. Machinery coming, nothing going. Ravi is giving. I am repeating it. Machinery coming, nothing is going. Ravi is giving. That's why machinery account debit, Ravi account credit. This is also over. 20,000, 20,000. Now coming to 15th. Cash paid to Ravi. Cash, we took cash and paid to Ravi. Put this question. What comes? Nothing. When nothing is answer coming, when nothing answer is coming, come to this. This cash is going to whom? Who is the receiver of our cash? Read this. Ravi is the debit. Put here. Ravi, debit. What we are giving? We are giving cash to cash. 20,000, 20,000. Narration as usual. This is also over. Then salaries. This is an expense. Expense means we spend some amount, it won't come back. Salaries, when you pay salaries, it won't come back. When you pay rent, it won't come back. When you pay interest, it won't come back. When you pay electricity bill, won't come back. All these amounts are called expenses. Whenever you see any expense in the transaction, what you have to do, that expense name should be debited. As per this rule, debit all expenses. Salary is the expense. That's why salary account is debited. Then salary debited, okay. Then what about credit? What is going out for that salary? We are giving cash. Since you are giving cash, cash is going out. Even though it is not given the word cash, you can understand that cash is going out. That's why cash account is credited. Amount 5,000, 5,000. Now rent received. Rent received means what? What happened really? You have to go into the transaction. Don't try to look at the words here. Going to the transaction, what happened really? Rent received means somebody gave some amount to us in form of what? Cash. So cash is coming, cash account debit. Then that rent coming means that rent come is retained by us, is kept by us. We won't give it back. That rent is income to us because we have given some room or some building to somebody else. So he has used our building, he gave some money. Since money came, cash debited. Since that cash is our income in the name of rent account. But sometimes we can write rent received account. Here, rent received account also you can write. No problem. So this is the way you have to easily write the journal entries. You need not waste your time to think about what type of account it is, what accounts are involved, nothing. Only these questions. First question is what comes in. If anything comes, debit. Second question, what goes out? Goes out, credit. If nothing is coming, somebody is receiving, debit his name. If nothing is going out, somebody is giving, credit his account. If you find any expense, debit that expense. If you find any income, credit that account. That's it. So it's a matter of learning 10 minutes or 15 minutes. That's it. So by using this techniques of writing journal entries, you can write the journal entries very easily and very fast. I hope you have understood very well. And after that, you have to take the total of all these items in the debit column and put the total here. Here, credit column, put the total here. Both the total should be equal. This is the first page total. First page of the journal. This total is taken to the next page. That is the reason we have to write here. Total carried means taken away. Forward means to the next page. Simply C by F. That's it. But in the examination, you need not write these two. These are recorded only in practical accounts. When you became a chartered accountant and people are maintaining books under you, you have to see whether these rules are followed or not. But nowadays there is no problem. Everything is done by computers. Okay, bye. Thank you. Now, if you like this video, since it is my first video, you should encourage me a lot. Tell your friends. Encourage me so that I can help you in many ways. I can teach this and many subjects in CA and other subjects also. I can also teach this spoken English for Telugu medium, especially. Even for other mediums also, we can teach American with American and British accent. You can make use of my videos. Be in touch with me. Thank you. Thank you. Bye.